Hey guys, welcome back to another video, and today I'm here to talk about a stock that I think is potentially going to blow up. I think not even potentially, I think the stock is for sure going to rise a lot in the short term. So if you are interested in that, be sure to stick around. If you guys do enjoy this video, be sure to smash that like button, make it light up, just absolutely punch the like button, give me that. And then subscribe to the channel if you enjoy this content and you want to see more. So without further ado, let's get right into it. Great day in the portfolio today. Past week has been rough. Past month, can't complain. Past 3 months, I can't complain at all. So if we see today, this is really good, making up for a little couple few small losses past couple days. So I'm glad about that. And let's look at the portfolio. Let's look at the percentage gains from every stock today. So Honest did very good, but we see there's 1% that sticks out. This is SoFi. SoFi is up 7.63% today, and that makes the stock now worth $25. Just a year ago, SoFi stock was trading for $7. So this stock has almost 4x'd in that time, and we see I got SoFi stock for $8.44. So I got SoFi at a pretty good price. I can't complain about that. But we see, this gain today is largely due to SoFi. SoFi is a stock that has been on a crazy run recently. And if we look at the news today, we see that they don't even have anything for SoFi. But we see Citigroup, obviously Citigroup, they lifted the price target to $28. SoFi is already almost at that. So this stock is on a tear right now. Look at the past month, the past week. You can't stop this stock. Even when the market's down in the past week, SoFi's up 7%. Past year, past 5 years, they haven't even been a public company for 5 years. So that's pretty impressive. So to say the least. But let's get right into why I think SoFi is a great investment. So first, starting off, we see that their market cap is almost $30 billion. Decently sized company, not huge. But we see their PE ratio, this might scare some of you guys away, is 47. But for the space they're in and what they're doing with the company, the way they're growing, that's very fair. Might even be a little low, honestly, compared to what I think they're worth. You see this stock, it's on a crazy run right now. I think that it's going to look a lot like this graph eventually. And I don't think that's that crazy to say. Palantir has, been on quite the run themselves. And we see the past year, the past 5 years, they haven't been a company for 5 years yet either. But you see, they rose a lot. They went to 35, dropped a little bit. And now that drop of dropping to $7 from 35 is just, you can't even tell in the grand scheme of things because the stock is worth so much right now. We see the 52-week high is $190. So this stock's even down a decent amount from that right now. I think that both of these stocks are pretty comparable as far as it goes with that. And then let's get into the SoFi financials, and then I'll give you guys the reason with their business model of why I think that this company is very much worth investing. So we see they have very simplistic screens. I like that. And then we look at their numbers a little bit. Their members in thousands. Then this is their recent earnings report, Q2, not too long ago. It was June 30th, if I'm not mistaken. We see their compounding annual growth rate on members. The growth is 51%. That's compounding annual growth rate. That's pretty insane. And then we see the compounding annual growth rate in products is also 53%. So I really like to see that. We see that also they have diversified streams of revenue. And we see that they're actually growing a lot in the fee-based revenue, which is really good to see because you want banks to be making a lot of money off of fees. Not good for us, good for the banks, you know what I mean? But you see all their other revenue is almost just 50-50 with the fee-based revenue, and I really like to see that. I think fee-based revenue being their driving revenue source is a good thing for this company. We also see that if we keep going down, they also do have this lending platform, so they are offering different financial services now. They're growing as a bank, as a company. We see that there's a lot of consistent credit performance. This is a finance company at the end of the day, but as much as that it's also a tech company. That's why they're so richly valued. There's a lot of numbers on here, but what I really wanted to get into is these numbers right here, which we'll talk about after the business model. So the thing that is most attractive to me about SoFi's business model is they only have 5,000 employees. SoFi is a relatively small company, employee-wise, 5,000 employees. It's a good amount, but it's not that much for a bank. It's a really small amount for a bank that's worth $30 billion. Really small. So what SoFi does is they're all online, which is very smart. Anthony Noto knows what he's doing, obviously. Look at the stock price. but they don't have any in-person locations, and this is, all due to them not having to pay the lease, and they also don't have to hire employees to be in the office, doing probably nothing. If you go to Wells Fargo, you go to Chase Bank, which, let's look at those stocks. Wells Fargo, keep in mind, these are SoFi's financials right here. They're 30 billion market cap, 47 PE. Wells Fargo stock has a $253 billion market cap and a 13 PE. They also do pay a dividend, so it is not exactly the same, but it is, pretty close. And then if we go to JP Morgan, Chase, we see that this stock has a P ratio of very low too, around 15, and a market cap of 800 billion. So JP Morgan is definitely doing all right for themselves. $800 billion market cap is nothing to, bat an eye at. That's pretty good. But I mean, SoFi has that, they can do that. And that's 20x, over 20x what they're worth right now. But I think that that's not that out of the picture. It's almost 30x. But I mean, SoFi is I think they're on the right path for that. And I mean, if we look at their numbers right here, just look at their revenue. This is the number one, I think, factor of a great company. So it would show the past. I mean, they haven't even been public for 5 years, which is insane. But I mean, look at this. The way that they're growing, trailing 12 months, we see their revenue has risen every single time consistently. It hasn't gone down once in the trailing 12 months. Not at all. It hasn't gone down. It literally hasn't gone down once. And then we see the year over year quarterly growth is still, I mean, it went to the low teens for a little bit, mid teens, but now it's at 30% again. And then it's at 30% here. And it seems like that's kind of where they're sticking around. I mean, having a 30% quarterly growth rate as a company of this size is insane. I mean, that just means it's going to grow a lot faster. And, it's going to get to the top a lot faster. And what I wanted to show right here that I thought was very, very interesting and also very appealing to invest in this company. So we look at their total net revenue, and we see that 3 months ended June 30th. So this is 3 months before June 30th in 2024, and then in 2025. We see that their net revenue increased 43%. In 6 months, it increased 31%. So that's, 6 months is a better base case. It's more time to judge from. But then we look at this. So their change in net income, this is the money they're actually making, is 459% from, comparing these 2 quarters to each other. So, I mean, that's pretty insane in itself. And then we see the 6 month one, the change is 60% still. So having a 60% increase in income, the money that the company is actually making year over year, comparing it to the same quarter last year, is insane. I mean, you have to get into that. You know what I mean? It's hard not to buy a stock when you see stats like this. It makes it hard not to buy SoFi. They are, expensive. They're at an all-time high right now. What is their all-time high? It's 25.25. So they are literally at an all-time high right now. They're 14 cents off of it. They hit that today. I'm pretty sure they must have. I don't see it on the graph, but yeah, they've never been higher than this. So I mean, SoFi is pretty hard not to get into at this price. I think maybe they hit it in the IPO, in the first year of being public. But even then, I mean, they're bouncing back, and you see this is starting to become a smaller part of the graph. When they went down to $4, it is starting to become a part that you can't really even tell was there. I'm just saying, I don't want to, say too much, but I think that, it is starting to become something that kind of just looks like it was never there. So I think that their Palantir comparisons are not very far off. When I see people make those comparisons, I don't think that that's, very crazy to say. And then if we check the fundamentals as well, we check the gross profit of this company, same story. They're increasing, not only are they increasing revenue on a trailing 12-month basis, they're also increasing their profit. So maybe the company spent a lot on advertising one quarter. It doesn't matter for SoFi. They're still increasing. They haven't lost profit or revenue in every quarter of this company's history. Like, this company is, for all the time that this company's been around, they haven't lost revenue or profit in a 12-month period. I mean, that's insane. That's, a telltale sign. Okay, I'd probably get into the stock. And they're $25 now, so I can get why you'd be like, a little scared away. But I mean, look at Palantir right here. Similar cases, this one. They had growth rates, great growth rates. They dropped. The stock dropped. But I mean, look at Palantir right here. If you were scared to invest in it, you saw it, like, let's say it's like this. The the little graph right here where it starts over here at 124, downs all the way to 74, and then goes back up to 124. Let's say it went back up to 124 and you're like, okay, I think it's going to drop again, then I'll get in. You missed out on a 124 to 186 rise. It was actually 190. And it's probably lower here too, but you missed out on that. And then same thing down here. You're like, okay, I think it's going to drop soon. It's at $39. It's probably going to go back down to 30. You missed out on, 4xing, 5xing, pretty much over 5xing your money on this. So you really missed out a lot if you didn't invest in Palantir. And I had a little bit of Palantir, not much. But I mean, it definitely helped out the portfolio. It didn't hurt at all. But I think SoFi is that opportunity again to have. And I think that if you didn't get into Palantir, this is a great one to get into. This is going to be an opportunity that you don't want to pass up on. SoFi is definitely very intriguing at this price. And I mean, you see the company's fundamentals, you see their price points, their profit, their margins, their revenue, and it all just looks really good. I mean, there's nothing that looks bad about this company. And I'm very hopeful for the future with this one. And I do want to, dollar cost average up as soon as I can. And I think that if you do want to buy a couple shares of a new stock, I'd try out SoFi. Why not? So that's all I have for today's video, guys. If you did enjoy this, be sure to smash the like button. I'd really appreciate it. It helps me out a lot. Also, be sure to subscribe to the channel for more videos like this. I'm uploading daily. I'll catch you in the next one. Peace.